You're live.
Excellent. And I'm going to refresh my phone and see that it's here as well. Fantastic. Good morning, everybody. Good morning. Happy Monday. Wow. Time is literally flying. And I'm just checking to see if I'm showing up on Facebook. Let's see. Says that I'm live on Facebook. I'm just not sure if, let me see. All right, it might take a while to show up here. Let me try that again. A little bit of technical difficulties here, so I'm just we're going live to Facebook in a different way, and hopefully you guys can hear me, see me. Okay. Anyway, let me see. Okay. I'm just gonna quickly send a message. On Facebook. Just checking, guys, to see that because I'm not seeing it at my end, so I'm just slightly concerned that you may not be seeing it. I'm going to try something else. Oh, yes, I can see it now. Okay, perfect. And thank you very much for tuning in, guys. We have, I think, Denise M. Jones, welcome, happy Monday. And Andy Jean, or Jean, depends how you say it. Fantastic, guys. Hope you've enjoyed your weekend. It's been an incredible few weeks, I can tell you, on the space. I'm sure that you've witnessed it yourself. Those corrections that we saw play out as well, which I gave you a heads up about, which I'm going to break down very shortly. But we're back literally back in the swing of things, guys. Right? The volatility is back. We've had record-breaking levels of volumes and transactions this year so far. So, incredible time. If you guys are still excited, still pumped up, and you're rejuvenated somewhat from the protracted bear market that we've been through, I'm just glad. I'm really happy to see people just once again get engaged. I think it's more so the engagement that I like to see. And, I want people to see this. It isn't an easy game. It isn't an easy ride, but the journey shall certainly be rewarding when all is said and done, right? So I'm going to break it down. I'm going to fill you in. I'm happy that, everything is going the way that somewhat we expected it to, and these are still early days. I know you guys, from what you're hearing and seeing, it may not feel that way at times, but trust the process. Okay, trust the process. These are early days. These corrections that we're seeing are to be expected and healthy, and I do anticipate even more to come our way, actually. So let's get into it. With Bitcoin in particular, obviously the market leader, its dominance in particular has been noteworthy. So, we've seen it at one point when in the previous market cycle, where during the bullish, the parabolic run that we experienced in 2017, we saw the dominance of Bitcoin had reduced. The altcoins were the rage at the time, and there was a lot more, especially with the ICO craze, and less due diligence being done, and people literally throwing their money left, right, and center in any white paper, any project that they saw. They just didn't want to miss out. It was a pure case of FOMO. And so we've learned those, all important lessons since then during the bear market. So that, bullish market cycle and the similarities between what we're experiencing now in terms of the price action, in terms of the behavior and the patterns we see on the chart, very reminiscent of the 2017 bullish run. However, a lot has happened, a lot has gone down since then, with increased infrastructures, developments, awareness, rate of adoption. The network effect has been increasing, network fundamentals have been increasing. So, a lot has happened, and we are aware of this. It's been established and spoken about many times over, but it's very important to where we are in the market right now, as we see it play out, have that perspective that 2017 and where we are right now in the market, in the market cycle, we get somewhat of a redo. Okay, we have a second chance now, this time with the hindsight, added benefit of hindsight, extra, more knowledge, more experience. We have a lot more, hopefully with the correct mindset. We've become a lot more resilient, those of us that have survived, endured the bear market. And this thing plays out. There's no perfect playbook for this. It's we're literally at the cutting edge of this thing. So all the things that have been unfolding has been new, and we've been literally going with the flow and, figuring out these things, these lessons that we've been picking up along the way. It's priceless, guys. It's absolutely valuable, and it's now with, looking back and putting the, looking at the dots, connecting the dots, that's where you'd be able to get a more clearer picture, a more, you have these reference points that are extremely important to help you have a more of a deeper understanding and where we are, respecting market cycles and respecting the developments, collective developments in the space. That is one of the key components, key areas that we need to always focus on, is not necessarily what these companies or individuals say, it's what they do with their money, with their time, the resources being poured in. That is what we're watching, that's what counts. And ultimately, in the end, these fluctuations in the mid, the journey is going to be precarious. No one's, sugarcoating that aspect at all. But there are times, believe it or not, where we can actually enjoy and see that the rest of the world is slowly awakening and catching up to this phenomenal technology. So, with that being said, Bitcoin, what was it? Last time I checked, it was that. Remember I mentioned 7,700 was last week I mentioned that. In fact, it was happening live as I was speaking on that previous Monday, that, Bitcoin was establishing some level of it had established a high at that time, but then it was correcting back. And so 7,700 anyway is a good area to watch. It's a key area. Obviously, it broke that resistance. And in fact, most of the key resistant points on its way up, it broke it with such speed and with a lot of momentum and gusto, with a lot of energy in there, backed up with increased volumes. However, what we have been saying though is these corrections are coming at this point. I mean, it's unsustainable to have it go parabolic so quickly like that, literally gaining 1,000 in that previous weekend. It gained 1,000 within a day. And so it continued onwards. At some point, it was going from, you know, 7, 8, and then, you know, it hit resistance at that 8,300. Tested it a little bit above that as well. And depending what exchanges you use, some, you know, show a premium rate, premium for Bitcoin. So you may have seen at 8,400, 8,500, somewhere in between, even in some cases 9,000. But in CoinMarketCap, it takes the average, it calculates the average weighted price. So it takes all these figures from these exchanges, doing these volumes, and gives us an average price for that to, you know, give us an idea of what the price for Bitcoin, other coins, and, you know, the total market cap would be. Now with Bitcoin, I'm sure you've seen today in particular, the market's in the red, it's bleeding out. Again, the corrections that I was talking about, the levels that I mentioned, watch out for previously. I mentioned it has to stay above that 6,000. That's going to be a key support area. But in the meantime, that $7,800, then down to 7,300, at some point 7,100, and I did see it dip below 7,000. In fact, 6,900 and something. But it was so quick. It literally just wicked down. Like I expected, didn't stay there for long. So that is a very is an important demand zone. That's clearly, buyers are still waiting to get it at those discounted price. And in fact, what's been going on is that they've been following the mantra of buying the dip. So we're seeing price doesn't really stay in particular zones for too long. Especially with these key areas where buyers, you have a wall of buyers waiting for that. And so it's been, you know, the bears are giving up they're giving a good fight. There's been, even with the consolidation periods, the resistance, it doesn't last that long there. It's either like a clear trend up or down. And that level of volatility, as I mentioned, is increased in the market. So but yeah, what's noteworthy as well with Bitcoin, it has slightly lost its dominance, just a bit, about 3% off. It's now somewhere in, just above 56%. Again, it's not that much difference to what we've seen before. I mean, the lowest I saw at some point earlier, in fact, the previous month was like 50%. Remember, I mentioned it was just around 50, 51, and we see it slowly climb up. Yeah, it's been, especially, what was it? I think it tried, the highest it got to was 8,260, give or take. That's the average calculated weight, average weighted calculation for that. For Bitcoin, 8,261 it tried to break, and it can do it. It can hold it. It broke down again. Remember the highest it sat, I mean, according to CoinMarketCap, it was 8,320, but I did see in some exchanges it went up beyond that. And yeah, it just couldn't break that previous, it couldn't reach that new resistance area that was set. So, you know, 8,261 isn't bad for it to catch up and try. But now, as you can see, if I'm to quickly check again, where is at? Yeah, it's still dropping down. It's 7,771 actually, shows on Bitfinex. But yeah, it's just correcting as we anticipated. It's healthy to do that. And it's funny because it's coming across happening with the backdrop of all these increase in these fundamentals and the volumes, even with Google searches as well, is at a 14-month high at the moment. And so the interest, the renewed interest, and whether, you know, they're completely new coming into the market just off hearing Bitcoin's rise again, and existing investors as well, just waiting out, biding out their time, trying to get, you know, great points when the market pulled back to jump on board as well. But certainly still the power right now, I mean, where we are is really, really, I keep saying it, I feel like it's become a cliche now, but it's absolutely critical, because the bears can take this and retest previous lows, as I said, even down to 6K. I know from what we've seen with the buy, strong demand zones above that 6K area. 6,900 is, it didn't even stay there for long, but if it did try and get even further down, 6,500, 6,300, it needs to hold around those areas. Otherwise, if that starts breaking down, it gives you a bit of a heads up before it reaches that 6,000 that this isn't a short-term correction. It may be that the bears are looking to drag the market, extend the market cycle in their favor, because the market would start to get jitters if it gets towards a 6,000, which acted as previous, it was resistance, turned support, turned, you know, it keeps turning, changing its purpose, but it's now acting as support, very strong support where that is right now. But if it even as the price retests and goes anywhere near that, it's already going to ring bells. It will, you know, scare some investors maybe to give up part of their holdings, to liquidate, you know, but we will expect some level of profit taking to happen at that moment. And you know, if it does get below that 6K, I definitely see a lot more investors getting a bit more jittery. You know, some of that positive sentiments that we've seen would be, you know, tested. And so below 6K, if it gets down to 4,400, for example, oh yeah, definitely some level of, you know, you'll start, you have the FUD increase, and you'd have people starting to question whether actually this was just a, you know, several set of corrections, and it's actually leading up to a further breakdown of price, and that the bear market might actually end up being extended. But right now the power is in the bulls, and so what they decide to do is so critical, because they do have the ability right now, if they hold out firm, take these corrections as opportunities to obviously buy the dip. These pullbacks is where it's at, and how they will be prolonged, how they'll be extended is going to be another thing to watch. And so if it is just a short-term correction, price needs to hold above that 6,000 mark, preferably to stay above 7,100. But if it cannot maintain that, then I see it breaking down and retesting that 6K. And at that point, it would be in the bears' favor. You know, they would be looking to prolong that correction. And, you know, we do not, at this point in time, we do not need more FUD and more scare stories and whatnot coming out that are baseless. However, on the charts, on what we're seeing in the larger time frame, certainly with the weekly showing, is still overbought. You know, it is setting up to correct down at some point and retest previous lows, but where it respects that, where it, if we see a bounce, if it bounces off like 6,500, for example, then we know Like there's no, you know, the demand zone there is incredibly strong. The bulls will not allow the market to get to a certain level again, because it's just the level of development that's happened here, and a lot of the things that they're now aware of with hindsight, that the immense pressure in that particular area will always, you know, hopefully, I wouldn't say always, but they'd need to make the bears, you know, absolutely terrified to take it down there, because they'll get burnt. But again, I do feel that the market can be very, very fickly at times as well, depending who's participating. So if some of the retail investors were expecting to fall for some of the tricks that the whales and traders do, but again, I feel like from where we are at this point, we have to be realistic and expect these corrections to happen. And the bulls, in order to test 8,000, I think the next target that will look to try and push this through is to 8,500, and from there, if it holds, we might even see consolidation at that point, take a bit of a break, and then have another push up with increased volumes to try and take it to $10,000. So we're looking at those key psychological areas, those zones, and right now 8,500, I would consider 8,500 being a seller, quite a strong selling zone, even at 8,400. But the fact that the bulls are still keeping the price above 7,000, you know, that's a good sign. That's a good indication that this, even though these pullbacks are happening, which is natural, they're not as terrifying, they're not as extensive as we, you know, fear. But we have to just bear, I'm talking to the traders here who are taking, if you're taking both sides, if you're, you know, taking long positions, short, you're basically money both ways. That's fine for you. You'll know the targets to look for, previous zones to look for, that the buyers and sellers will be testing again. The market will be looking to see what, you know, what type of momentum, what type of demand will be there. So looking for those strong directional bias and seeing where the trend's going on the chart, they'd be able to see, if they get more confirmations, then they'll know, okay, this is actually the risk to reward is in my favor. So let me short now, because the market tried several times to break that 8,300 and something resistance area, depending on which exchange you're looking at and trading on. And yeah, it's tried. If they see that it's tried numerous times and it just failed to even try and break even $100 above it, $50 above it, I mean, yeah, the bears will get a good indication, you know, that then there's enough selling demand at that point to be able to take a position. But some of them might wait for market structure to be broken before they enter. They might look for other, you know, confluences using other indicators and whatnot. But certainly on the RSI showing bearish divergence still on the higher time frames, in particular the weekly, there's still scope for another, you know, sharper pullback to happen. But yeah, right now, I would love to obviously see it go and retest to 8,500, even slightly above that. But if it does the same thing that we just saw, how it ran up, you know, from you know, literally from 6K, as soon as 6K was officially announced, you start seeing an influx of money. You know, the volumes are, you know, literally breaking record there. And if you you saw how it, quickly, literally through the key resistant areas. It flew through it. A little bit of resistance it faced at certain areas, but it still continue to ascend and create higher highs. And so now where we are, do expect some level of correction to happen, but really is for the burden is in the bulls right now to ensure that the demand, that the prices are still above the key areas that I mentioned. Otherwise the bears are going to have a field day and retest previous lows and look to drag this on a bit longer. But for some, of course, for buyers that do want the price to go down so they can accumulate and buy the dip, they don't care how. I mean, some of them will even still want to see the price go down to 3 figures, which it's extremely unlikely to happen at this point. But we can't rule anything out in this market, as we've seen, and there's no certainties, as we know. And so the correction might be seen down again to 7,000, anywhere between 7,200 to 7,400, around that area. So remember, staying above that 7,000 has been consistent so far over the last week or so. It's been keeping that in that bull area, but yeah, there's still a clear strong demand in slightly above that 7,000 area. And yeah, I do see another run trying to break that 8,000, 8,300, 8,400 area happen again. But the correction that needs to happen to give it a bit of a push, the bulls have to real come back real hard and strong on this one. And so yeah, it better be staying above that 6,000 6,200, 6,300. As a heads up, I wouldn't say just 6,000, but as it goes down, the market will already be looking at certain areas that it tested. So just above 6,000 will give you an indication already of whether it's looking to turn to cancel that bullish sentiment that we've had and look a lot more. At that point, it doesn't look short-term bearish. Because it will be setting up to try and retest that 6K previous low. So we don't want it to go there, but if it does, at least it does give the market an opportunity to pull back properly. And the further it falls down, the further it pulls back down, and the bulls recover at that point, the more successful the rise will be at that point from there, because we do want it to go up slow and steady, so it will be more authentic. All these fast moves that are happening, especially with no catalyst, it's not based on news or new developments, they're purely technical moves on the charts, and that's somewhat been manipulated, and we're seeing right now in particular the market is going to retest it tried already, but it will try and attempt again, but it didn't create it didn't create another high there. So yeah, 8,260 is pretty close, I have to say, to 8,320, but it didn't even try and get anywhere to try and attempt to take it over or anything still. But yeah, anyway, depends how you see it, but to me it's like, okay, it's given a bit of enough of a push, but yeah, there's clear resistance there, that strong selling zone there. So so now our focus will be on what's going to be announced tomorrow. the VanEck Solidex BTC ETF decision that's being considered by the SEC is another thing as well that may end up impacting price of Bitcoin and indirectly with the alts as well. And yeah, this one, as we know, we've been waiting. I mean, it's been delayed several times now. And at some point, the proposal was removed temporarily due to the previous government shutdown that we experienced. But they, put it through again, and this was published on the Federal Register, I believe, on the 20th of 20th of February. But also, I think on the 15th, Bitwise was also, Bitwise was also submitted, and their decision was the SEC decided to delay that. Now, with the SEC, they have 240 days to consider. That's the legal limit that they have to consider decision on that. And with this being proposed, even though it had been proposed, we've been waiting on decision previously for like literally almost during the bear market time, we still didn't get a decision, and they couldn't, at that point, they still said, we need more time, we need to still consider this. And they have 90 days, as of February the 20th, they have 90 days to make a decision. And, if they wanted to delay, they can again and have another, period of time to consider. And they, as I said, 240 days in total now. With last week, with Bitwise being delayed, it does already give us a bit of an indication. I think with this, it will be delayed as well. And clearly there's still some concerns, the efficiencies, the price manipulation, and the structure of the market. And, it's considered by some a commodity as well. So how they're, working out how this will actually, on the ground, it will actually work and be compliant to their rules without hurting innovation, without stifling that part, is going to be the thing to watch. But so far, the fact that these delays are happening, I'd rather it's better for them to take their time and consider things properly rather than rejecting, because that's what we don't want. But I think the market will still be absolutely fine. Crypto market is absolutely resilient. And in fact, if the institutional investors, we already know they've been getting involved one way, shape, or form. But if this part happens, it doesn't mean that it's going to put a stop to other areas, other infrastructures, other custodians coming forward and trading desks from happening. It just means that at this particular time it would get rejected, and that they don't have that means or infrastructure yet. But later on, perhaps as it continues to mature and develop, the SEC would then reconsider and approve it. So it's not too, either way, it's not too late. And worst comes to worst, we'll be absolutely fine. Bitcoin was absolutely fine without institutional investor interest in the first place. And, it really is dependent on I believe anything that keeps it as close to its original, purpose and ethos. I think that would be better. And because there's still a level of concern with institutional investors coming in and mudding up the waters, so to speak, and a lot of the corruption, a lot of that mentality and attitude that we saw in the previous collapse in 2008, for example, with the economic crisis at that point. We don't want some of those bad habits to come into the crypto space. But either way, any way, shape, or form, It's not a question of if, it's already, it's when, it's already happening, already on the ground. So it's just a case of how do we get something. They might have to add a few more caveats. They might have to restrict a few things, adapt or change a few things, and make it specific to our industry. Treat it absolutely separate from other asset classes and how they're monitored, and the laws will have to change. What will be passed in Washington is going to also dictate how this will be treated. But yeah, with tomorrow's decision, I think it will simply be delayed. I think if they were going to approve it, I think they would use the allocated time they have. They would do all they can to make sure that they get this right, because I don't believe this decision would be easy for them to make, because you're asking a traditional establishment, a traditional regulator, an authority that is beholden to a different thinking, a different way of, the mentality they have, the structures and processes they have is old-fashioned, old world, the way they consider money, and how they have these, they might have a cutting-edge technology in terms of monitoring, in terms of compliance aspect. They may be up to date with that, but really the mindset and being able to allow these technologies to flourish, and being able to strike that delicate balance between making sure that they can protect investors and they are compliant, they have with the full extent of the law, be able to crack down on the bad players, but do it in a way that still allows us to take advantage of the opportunities and the gains we can make, and certainly trying to establish that the not suppress the environment where these crypto companies, exchanges, all types of people involved in the space, and with blockchain as well, they don't want to be the reason why those companies then reconsider other places to set up, and go to Switzerland, for example, or Malta, other crypto-friendly, blockchain-friendly jurisdictions. So they're fully aware, and they're trying to balance the interests of all these, varying parties. But they have such a tight relationship with Wall Street, with Washington, with big players, institutions are already established. It really is like I scratch my back, you scratch mine. There might be compliant, them doing things by the book, but let's not get it twisted that if they had to choose a side, there would be with them, with the traditional space. So it really is just having sympathetic leaders in that in that area, within the regulatory body, that not only understands the technology, understands why it's so important, how it's developing, and at the pace, the speed, the people that are behind, some of the brightest minds that are behind, helping to establish a new way of doing things, in whether it's in business or in social or financial, whatever the case may be. I hope they take, and we do have crypto mom and crypto dad on our side, on the involved with the SEC commissioners, and so from where we are right now, either way, one way or shape or form, if it gets approved, do expect obviously a pump in the price, and will act as a further catalyst to give the bulls another push. If it's a rejection, of course, there would be a negative reaction. It may act as another catalyst for the bears, this directions that we've seen. But I do not expect such a momentous decision to be made at this point. I think they're going to try and use up as much of the time as possible, because there's still kinks in the armor. There's still areas that they're still working on and trying to come up with common sense, pragmatic solution that always comes down on the side of respecting the law, but also as they keep stating, try and do it from the point of investor protection. Institutional investors are definitely putting a lot of pressure on them to get this right from the get-go. So there's a lot of voices, a lot of influences being that they're placed under, and so they're going to do what is they consider is the right thing for them, and not necessarily for our industry. So I do expect that decision to be delayed, and they have they can extend it if they want another 45 days, another 90 days, and so on. For the first Bitcoin ETF, I don't believe it's going to come out just like that. I think there has to be another major push, and they're doing their very best from our industry, the voices and the representatives, the leaders that we have speaking on this, and teaching the SEC, the CFTC, exactly why. Even if you remember, if you compare it to previous technological cycles as well, a lot of those big areas, some people would say it's flaws and concerns that they have. It is where it is in the cycle. We have to consider that not everything has to be perfect before it could be approved, or to give it a chance to flourish. There's going to have to be some mistakes made, some increased risks taken. So, as long as they realize that they are in a unique position now to be able to, rather than banning it or prohibiting it, or restricting it or limiting it in any shape or way or form, while it's at this young age, I think they're going to look back at historical lessons, and they'll be taking some advice, obviously, from experts in the industries, but also looking at it from a legal framework. And these arguments in regards to concerns about money laundering and financing terrorism, and some of these volumes might be fake. They were concerned about that, the efficiency of the market, and because they are not fully controlling some aspects of it, I believe it's more of the control issue, not just the ability for these bad actors to create havoc and cause all these investor loss to happen via, for example, with the breach with exchanges being hacked, prices being manipulated, and so on. I think with the example of Bitfinex and Tether that they've been accused of, hiding $850 million, and also with the previous, the late 2017 run that we saw, that Tether was being used to artificially inflate Bitcoin as well. So all these concerns that something like that might play out again, and it might be worse. The devastation and the fallout from that. They want to be able to have some level of a degree of as much power and control as they can, which is typical of these, centralized institutions and regulators. They want to be able to call the shots as and when they want, but we know that's not the case. And we know that with decentralized exchanges, it will be a different nature. But already the concerns with, data breaches, hacking, not only hacking exchanges, but accounts, people's ability to practice due diligence, investors in this particular. I mean, even you know, some of the recommendations from more conservative voices saying that, okay, it should be only accredited investors that should get the opportunity to have access to this opportunity, is I mean, it excludes the very people that this was created for, to try and get away, serving as an alternative to the power and control. You know, part of the beauty of this system is that it's censorship resistance, with Bitcoin in particular. So the more decentralized markets we have, decentralized exchanges, projects and whatnot, the more the control and the influence is away from the traditional areas. So we have not only our risk is diversified and mitigated in some way. It's not saying that the space is not risky, but we have that peace of mind knowing that should something happen with the US dollar, whether the US economy collapses or some other worst case scenario happen, we always, or you know, any country that we travel to or we live in, if that country, if that monetary policy, if there's hyperinflation, for example, as we've seen with Venezuela and Zimbabwe, if something like that happen and you don't trust the bank, or even with banks as well, people think bank runs will never happen, but we've seen bank runs happen in Cyprus, in Greece. You know, with previous, the Greece had bailout, and we know with the US, the powerful, the banks and the financiers had a incredible bailout in 2008 and 2009, right? Because of, you know, they brought the economy down to its knees. So some of them were too big to fail. And so what we're seeing here is that they're, you know, considering all these voices and all these arguments, and they are going to probably come down on the side of caution, in my opinion. I would be very surprised if, you know, they end up fully being open to this market and industry. I think it will be step by step, it will piecemeal, and any approval that they do give is because they're fully confident in all the key points, all the key concerns that they have. One way, shape, or form, it will be controlled or mitigated in some way, shape, or form. That there are ways that they have tools and resources that they can use to be able to somewhat monitor, control, and be compliant in regards to the rules. So, but from what we're seeing, Bitcoin and crypto space, generally speaking, the way it's been progressing and moving, and some of the lessons that have been deployed, and how we're having more and more institutional investors not only being interested, but they're actually actively investing their time, not just monetarily, but being able to find ways that they can cut a piece of, you know, the pie for themselves. I mean, the number of trading desks increasing, the number of custody solutions increasing, and obviously there's demands coming from institutional investors, but they do want regulation to be in place. They do want protections in place. They do want the SEC and the CFTC and other bodies to get involved. And so what BACT is looking to do, what the parent company of New York Stock Exchange, ICE, is looking to do, is help be part of that infrastructure, part of that environment where they can act as a basis, as a foundation, and you know, establish themselves as a bridge to this world, and being able to offer those protections and the peace of mind, and be able to still have exposure and capitalize on the opportunity that this industry gives us. So they want to be able to have their cake and eat it in some way, shape, or form. So, and they certainly do not want to miss out on this next stage with the evolution of money. And so we know the way things are moving. A lot of these digital assets, digital commodities, the commodity, even commodities, existing commodities like oil, gold, and these precious metals, they, in some ways it's already happening, but you have stable coins that are backed by these commodities, and you're going to have tokenizations of these as well. So, it's just a matter of time, and it's just the change in nature of this market and of the industry. They have to adapt or die, basically, and regulators are playing a catch-up game right now, being able to, and if more so than likely, if they don't understand or they don't approve or they feel threatened by the level of progress happening, they're more likely to reject it. But if they have a more clearer, a more open approach, and they go beyond their own vested interest and look at the potential it has to solve many of the challenges that we see around the world, and if it's providing value, and to some extent a level of wealth to and opportunities to more people out there, why would they be against it? So it's who's lobbying and behind closed doors, who's putting that pressure on them to to move a certain way. And that's my concern with the SEC, as much as they and CFTC and other regulatory bodies, as much as they say that for the investors. I mean, what type of who are the investors that they're protecting? And I believe it's institutional investors more so than not. So yeah, from what I'm seeing as well, this is it is going to be important tomorrow to see how this impacts. But when I say important, it's how what do you call it? How this position is seen right now by the SEC. Whether they're going to continue to be more open to others, because if they reject it right now, there would be concerns that other instruments, other proposals might have the same fate, simply because the technology, the authenticity and the tools and other aspects of it. One of the biggest areas, obviously, with price manipulation, they want to be able to have a market where it's a lot more established, volatility is reduced, there's more control, and for the regulators. So they want these exchanges, they want these companies to report back and provide them with as much information as possible, so they can deduce from all the data, all the intelligence that they get. They can aggregate it and have these tools in place, so they can get a much clearer picture of the situation on the ground. And this argument that they keep, some parties use to say, well, these markets are being manipulated, and criminals use cryptos, and we have all these hackings and whatnot going on. Look at what's happening with the fiat. Look at how many there was I can't remember the figure now, but there was some incredible statistics that I read upon, bank robberies and attempts at bank robberies as well, and the number of hacks, the number of breaches that these banks go through, the losses that they make, the number of scandals, internal scandals as well. A lot of this is not being reported. It's only when it gets critical and it's unavoidable, it gets to the mainstream media and we hear it. But imagine what's happening behind closed doors, and all that level of corruption and deception and theft going on, and other attacks that they're getting. Can you imagine on the daily of what that would look like? And so if you put that stat against crypto and blockchain, I would bet my bottom dollar that criminals are still, by and far, they're still using fiat to get their money around, weapons, drugs, other commodities and whatnot. As it's right now, it's the most liquid, but also they already have infrastructures in place, and how they convert it and what they use it for, that it's a lot more useful for them right now. Even with Bitcoin, I know with privacy coins like Monero, there's different the way that it's written up. You're going to have some level of protection as a criminal, but with Bitcoin, you actually can't get away. Police can still track certain areas, your footsteps, to be able to, they may not be able to identify you on the blockchain, but they'll be able to put other pieces together to try and identify you. So it's not as clear cut as they think it is. It's that narrative, even the numbers bear out that Bitcoin and other cryptos it's a small percentage of the overall volume that's being used for criminal activities. So it's still no way near, the level of corruption and theft and money laundering that we're seeing using the, existing methods, the traditional ways of doing it. So fiat is still being used by and far, is the most popular with criminals. So this argument that they are posing is not, that's not right at the moment. It's really their concerns about the future as this industry grows, that because there's a percentage that they cannot control, and they'll always have less power no matter what happens. They'll always have, the ways the systems are set up, the regulators, the government, and other major stakeholders are not going to have that level of dependence and control, and so that's why they're relying so much on these other areas like artificial intelligence, machine learning, setting up all types of algorithms and all these programs and other things that they already have. Some technologies we may never even learn about. Yeah, they're already working on all these solutions to be able to track, monitor all these criminals and, triangulate that information and whatnot. So they have the means and the tools and the, weaponry and so on. It's just they don't like the fact that there is an alternative system that they do not fully control, that the little people are able to use in some way, shape, or form to be able to reduce their reliance on the government, on the banks, on the traditional space, and be able to have more control back and being able to define value for themselves. Yeah, as long as they're getting a cut of their part, I think their main concern is like tax revenues, how they're able to get this reported, because it's still where crypto returns are concerned, people are still underreporting what they're doing and what they're gaining, and so on. And so they want to be able to get ahead of that and tackle that. And so with these tax authorities worldwide, they're also working together to come up with something standardized so they can share intelligence and information, and being able to, ideally try and, minimize and cut down on these, tax havens abroad. But because this is of a digital nature, it's another ball game altogether. So what we're going to end up seeing is probably a dual world where you will have some crypto-friendly jurisdictions that crypto tax implications is also, more favorable to investors, and that they're going to be at odds with those countries that have decided to ban cryptos, or or restrict it somehow, and money will flow wherever it needs to be able to minimize their the power and influence that other people will have to dictate over over their money and how it should be taxed, how it should be controlled and spent, and so on. And You know what's encouraging as well is the president, was it the European Central Bank? They recently clarified as well that they don't see cryptos right now as a threat to the financial stability, because they're not taking it that seriously. They're saying that the amount that we have right now, the total market value, the number of cryptos there are, and the quality of them, is not enough to be able to bring down the current systems and monetary institutions and whatnot. And it's not going to take over, and everyone won't be suddenly switching off, leaving fiat behind and going to jump on digital currencies, because there's still some aspects, some properties that it's not fulfilling to be able to be taken as a serious store, alternative store of value. And so they are not feeling threatened right now because of where it is in the market, but they are looking at stable coins with interest. They are taking the fact that there's a mechanism where you'd be able to peg these tokens with real life commodities, precious assets, and how that is treated, and how that is utilized and exploited, is they're watching that with interest, because that will definitely have, it's the best of both worlds, and it acts as a bridge between the crypto and the fiat world. So this is something that they're watching, and they're going to come out with policies that target stable coins. I mean, some of them may even ban it, but for now, I think they're probably going to end up trying to tax it, or have some sort of gains that come from it, or even they might even do their own version. They might even create their own stable coins. But it definitely is interesting to see, even on the Eurozone side, because if you know the recent history with the Italian economy, Spanish, even Portugal, Greece, Cyprus, they've been having issues. The level of debt in Eurozone, it's incredibly high. And with this Brexit situation as well, it's really making them nervous. It might be the start of a disintegration of this massive, decades-long project. And their vision is literally to try and become like the United States of Europe. So a United States of America by being the United States of Europe. I mean, they're getting establishing and fostering closer and closer ties between these different members of the European Union, and that's part of the backlash that's happening, and that's why Britain wants to come out, because they want more power and independence over their own tax revenues and their borders. Because being part of the European Union means we have to accept a level, we have to accept a larger number of migrants from all over the European Union, even if the pressures there on public services and public resources and whatnot. And so that's, part of the reason we're seeing, the British people wanting to take back control in some respect, in some ways, over their own affairs. But it's going to hurt them financially, because even the economic forecasts are saying if they have a no-deal Brexit, we're going to have, was it 9%, 10% down the GDP, that the economy will lose up to 10% of its value. And with a deal, I think they said it would be reduced to only 3 or 4%. But still, the best deal that we have currently has been with the European Union, financially, socially. I mean, we don't need visas to go to different European countries. We have free healthcare wherever we go in the European countries. You're able to use your phone data allowance for free, like literally around the European Union, you're able to use that. And so for internet, for text messaging, for phone calls, it's highly regulated in the European Union. It's more favorable for consumers. imagine if you had a deal in Mexico and Canada where you're able to go to any country, any of those countries, and you're able to use your tariffs, your cell phone allowance there without any additional costs, and no visa. I do believe that you do have some sort of alliance as well with the Mexican and the Canadian, but I'm not sure what benefits, what other allowances you have there. But certainly with the European Union, another, to be able to extend the national healthcare service, we get that free in the UK, but to also tap into the, those countries' health services. Being part of the European member, you're able to get that for free as well. So we're going to lose all of that once we come out, if we come out and have our Brexit. So we're going backwards in many ways, and their real fear with anti-immigrant sentiment as well. I think the real fear is just being overwhelmed with more and more non-whites, if I'm honest. But anyway, from what we're seeing anyway, we're on the crypto side, with the European Union and in the UK, they are trying to establish, they want to be able to still utilize the benefits of blockchain, of cryptos, and not drive away the opportunities for these companies to set up and be a good environment for these companies to flourish, and they want their citizens to take advantage of that. But they want to be able to have, again, some level of common sense regulations and being able to strike that balance. So we'll see. They're taking a let's wait and see approach with this as well. They're working behind the scenes and trying to establish a united, standardized approach to this. But they're treating those two, they're seeing those two things differently: stable coins and the rest of the crypto space. And in fact, I think it was Mario Draghi, president of the European Central Bank, he slammed Bitcoin for not being a currency. And Ardo Hansen as well, earlier this year, he's the governor of the central bank of Estonia, and he also wasn't a fan of cryptos, and said that they were complete nonsense and whatnot. So for them to, I think part of the backlash is it's not just a lack of understanding or appreciation of what it can do and what it may, where it may go, and how it'll develop. I think it's because it threatens them and their way of doing things. Very important to read between the lines what they're actually trying to say. But they're still not seeing this as a threat to them, is what they say. Officially, we'll see. If they start banning things, if they start restricting things, then we'll know where their real thoughts are. And then you have Grayscale. Is it Barry Silbert? I think his name is, the CEO of Grayscale. He came out rather bullish on Bitcoin. I mean, we know that they're quite heavily involved in the crypto space, but he mentioned that he's bullish on this particular wave that we're seeing, because the developments that have happened, investors are more mature, they're more likely to be aware of the technology and the actual real implications. It isn't just one of those speculators that will come in and just fly out with little to no understanding of what's happening. But the market sentiment, the fundamental aspects, even down to with the technicals as well. He's saying that these are all good, positive, bullish signs that the market is turning around, and all these developments that we're seeing is going to push the price of Bitcoin and pump up the crypto space even even more. and that it will be sustained this time around. Yeah, but guys, also bear in mind as well the Financial Action Task Force, the FATF, are going to come out with some rules as well. Remember, we mentioned before there've been you had the G20 meetings as well before. I think it was in Argentina, the previous one. But all these regulators and heads of states and governments coming together to find out how they're going to tackle this and how they're going to what their unified approach will be. And so with the FATF, they are going to come out with some international standards to regulate cryptos next month. These are not legally binding yet. They're not legally binding. These are recommendations that they're mentioning. But what is expected to happen is the countries, the jurisdictions that don't follow these recommendations are going to be, they're going to be blacklisted in some way, shape, or form. Like they're going to be alienated and stonewalled in a way, and they're going to be more scrutinized. And yeah, and these recommendations, as I said, they're going to be also, it goes against some of the concerns that people in the crypto space have. It's not really made in mind to help benefit the space, and it's actually bad for privacy as well. There's privacy concerns there. And so the fact that they're going to ask these exchanges to share information, transfer data, it's not just KYC, it's not know your customer, it's not just get an ID and their other details and whatnot. It's actually having all these exchanges, all these providers pass information on to each other, which is what the banks do, something called travel rule in the US. And so they're trying to establish an environment where all the players exactly, they know at any point what's happening with each other's customers. And the way things are set up in the crypto space is not really helpful. These rules are not really going to help them become even better, but we shall see, because there's also the fact that these companies, they're competitors, that information is sensitive, they do not necessarily want to share it with each other. But certainly I do believe if they're going to avoid regulation to some respect, that is best if they take a proactive approach and self-regulate somehow themselves, and passing information on about any potential suspicious activity or criminals, or having that trail of these hacks and whatnot, and being able to establish that you can't just go on another exchange and not have certain verifications done. It makes it harder for the criminals basically to dispose of their coins, or being able to use their services and whatnot. And so it also acts as a very strong deterrent. I can see why they came up with this, and that they need to have a unified approach, because it's a global issue. It's a digital issue. But from what I'm seeing, it's not, even though they've had these meetings and worked with these leaders in our industry, they're still going to go ahead and press ahead with their own version, what they think will be best for them. And so that means that they're putting a lot more scrutiny, a lot more control and power back in the hands of these regulators, which is unnerving the industry and the people within it. So again, I do worry that it's going to have this chilling effect on the market. Because they're cited, the FATF is given that power to try and fight financial terrorism in particular, money laundering and other big crimes that these people get it away with. And you know, the problem though with this technology is, like, we do love the convenience, we do love the speed, we do love the level of anonymity that we have. You know, it's on a global scale, and the opportunities that we get as well. But they're saying that you have these criminals that will also use these advantages, and being able to exploit, you know, all these loopholes and stuff, and that it will shift from the physical to the digital world. But we've already seen, you know, it's not really about the methods and the tools per se. It's more about the intentions, and you know, they're still using the fiat, they're still using commodities, they're still using weapons, and digital aspect, crypto is just another method. What they have to tackle is the human element, and not the actual means that they use. You know, it doesn't make sense for me to ban cryptos when, you know, then you'd need to ban fiat, need to ban weapons, and we have all these rules and laws established. But we also see behind closed doors there's a level of corruption, there's levels of, you know, impropriety that happen, and who's holding them accountable, and, you know. So on alternative systems that we, you know, create and we have, it's really to protect the users. And when users are, you know, placed in terms of protections and interests, they're placed right in the middle, is made with them in mind, that's far safer. And having a trustless system to be able to look after that, that is much better than putting your trust in a closed system, in a centralized system, in governments that have shown time and time again, one way, shape, or form, that they still have difficulties tackling corruption in certain places. That, you know, there's I scratch my back, you scratch mine. You scratch my back, I scratch yours mentality still pervading and still happening. So you can't really kill off, you can't really eliminate crime in any way, shape, or form. It's just part of human nature. So it's really about finding intelligent ways to be able to suppress and minimize that aspect, and having a carrot and stick approach, and have incentives to show people how, give them opportunities to do things the right way. And part of that will be this industry, because all they will attempt to do and be successful, you know, if they attempt to suppress innovation, is only going to take it down underground, and you know, face more resistance from us, and being able to you know, have other jurisdictions come up to fill that space anyway. So it's a different world than what we're operating in increasingly in this digital world and society. It's not possible to shut down. You'd have to shut down the internet if you want to really shut down crime, shut down, you know, have total control. And we don't live in a, you know, there are some dictatorships out there, but Europe and well, this can be argued another time all day. Who's the biggest dictator, America or Europe? But having said that, seriously though, with these proposals and regulations that are going to come, no matter what, they are going to place some sort of stringent laws and rules in place for this industry to be governed. And one way, shape, or form, anyway, we're going to get some level of clarity, but it's not going to be the, in my opinion, it's not really going to be the news that we're, you know, wanting to see and, you know, looking to have. I think they're going to be more, instead of going via the self-regulatory aspect, I think they're going to be a lot more harsher than we think. So anyway, with that being said, I've definitely got to go. It's well over time, but I hope you enjoyed that. And I shall see you next, was it Friday coming up? And in the meantime, yeah, have a great week. Stay blessed and stay calm in the while all this is going on in the markets. As ever, stay cool, calm, and collected, and continue to you know, take these moments as opportunities to invest, learn, and grow. So anyway, with that being said, peace out, guys. Have a great week. Take care.